how his degenerate gambling and then lying led to disaster. Kerviel was the same. You read the book about long-term capital management. You know, even Nobel Prize winning economists, when they behave like amateur traders, get amateur trading results, which means losing all their money. The only thing is we're talking about hundreds of billions. Oops. But the message is still the same, right? Too much risk, not enough strategy equals, you know, catastrophic results. So just don't let it be you. That's all. With that, let's get the party started, huh? It's a Friday. How do you feel about that? What are you going to do to take pride in your losses, huh? Maybe you should sit down with your spouse over the weekend and go through all your losing trades. Bill says, thank God it's Friday. Allah be praised. It's Friday, yeah. It's always bittersweet, though, because you know you're so happy that the markets are closed, but then again, the markets are closed. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. But please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma! My name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. Thank you so much for being a client. We appreciate you, and we want to make you happy by providing very competitive fees, because there are always fees. Oh, there's no fees in Forex. There's only spread. Really? So anyways, there are costs to being in business, but we keep our costs low and provide a high quality service. I think if you've ever had to deal with Traders Way customer service for whatever reason, maybe opening up at a trading account or something, I think you're pleasantly happy. Right? Like I said, our fees are very competitive. And having looked at third-party analysis of execution speed, very, very good, maybe not the best, but very, very good execution speed. But the big boys, right? You'd think the big boys around the world, these that have millions of accounts, if you look at their execution speed, it's actually most of them, if not all of these big boys, have very slow execution speed. Maybe because they're slipping you. There's no, right? There's no fees at my big broker. Slip, 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 slip. So anyways, so we wake up in the morning and try to be the best broker for you as possible, and we appreciate that you entrust us, and that we thank you for your respect and loyalty. I do these sessions 7:30 a.m. Monday through Friday here at Forex.today. Thank you, Forex.today. First Friday of the month, I'm over at fxstreet.com for Trade Non-Farm Payrolls Live. Yep. Bill mentions new swing trades for the week and month coming up. Very nice. Can they? Bill, you're so funny. What would be the challenge of that? Right. And no matter what, even if it was 50 million, we're an ECN, right? So it goes into the interbanking system. So as long as the interbanking system can handle $50 million trades and stuff, right? Yeah, well, contact customer support at Traders Way. Talk to them about it. All right. So, anyways, let's move on. .com. But one way to look at it, Bill, like during Brexit and during the Swiss National Bank, I mean, that was a big one, right? I just started working with Traders Way, I think, around then. And I had money at another big broker. And it wasn't actually a lot of money, but I did have, I think, 2 trades on for the Euro Swiss franc. They were tiny little trades relative to the account size. And then I hear about the news, I log into the account, and it's like negative money. Negative. I think I had like $5,000 in the account, and I had 2 mini lots. And all of a sudden the account's frozen negative. I'm like, well, how much did it fall? I only had 2 minis open, right? And it blew out the whole $5,000 account. I'm like, oh my God. And I can't even get out. It was all locked up. For weeks it was locked up and dead, right? I'm like, holy crap, it must have been down 1,000 pips overnight. Thank you, Swiss National Bank, right? Luckily, it was just a small account over at that firm. But then at Traders Way, like, so I immediately get, contact Traders Way, the management there. I'm like, are you guys okay? What's going on? Are our accounts frozen? And he's like, no, look at your account. I'll look in the account. It's fine. I'm like, oh, what's going on here? And he's like, well, we don't hold the trades. It goes in the interbank. Why would there be a problem? I'm like, wow, you really need to send an email out to clients immediately because they're freaking out that that these big boy shops are going to be out of business, and some of them did go out of business. But it just proved like they were never in a problem. They weren't monkeying around with your money like other big brokers. The money that you were trading was in the interbanking system. You know what I mean? So like, woo. What happened to FXCM? Went out of business. What happened to Alpari? Went out of business. Yeah. It just took 2 years for FXCM to go out of business. But whatever. So anyways, just, I mean, let that be your guide, right? All right, let me get rid of this. All right, so where are we at? I think we had a conversation late yesterday. Somebody was discussing bearish divergence and a bearish wedge and all these different things with the pound yen, right? No need to like point fingers at whom, but the conversation was, I couldn't even see it. Remember that? I'm like, divergence, who cares about divergence? It's going up. And wedges and stuff, I'm like, I don't know, maybe I'm just trained, through survival skills, but I don't see any reason on the planet to sell something going up like a rocket. Is that how you remember the conversation 24 hours ago? It was a friendly but open and honest discussion, right? Because nobody knows, right? Nobody knows. So as traders, it's great to discuss what would you do in this situation, what would you do in that situation, and that's what really was happening. And I think we were in here, and I'm like, you know what? No, I would not short this under any circumstances. If it fell, fine. But if it goes up, fine. I said, if you look at it over the course of years, much of the time, right, it could fall, it may fall, but it doesn't have to. But when a market goes up like this, Why would you spend your time looking for reasons to not be in it? Right? That's the big question, right? And so, as you know, I bought it down here and I got out at R2 and fine. And maybe it's early and stuff, but see, I don't care. I don't think about it that way anymore. You know, 10 or 12 years ago, maybe I did. What I look at here is simple. I mean, it's my job when I'm doing technical analysis. I, you have to respect your analysis, right? Right? You have to respect it. So what I mean by that is this is the projection for the top of the month. This is supposed to be the projected high for the month for the pound yen. Okay? And now there's some wiggle room around this depending on what the weeklies are doing. Now, if the weeklies line up perfectly, then you're probably going to respect it. If they don't line up perfectly, like this, you know, the weekly now target is here, right? Above X, but not dramatically above X. So if I see this as weekly resistance and I see this as monthly resistance, I have two choices. When, you know, if I get into this red zone, respect my analysis or throw my analysis out the window. What do you think works most of the time on the long run? Following the rules. Consistency. Right? Remember, you'll never, ever, ever, ever become a confident trader until you have consistency. Do you understand that? Like, I believe we all agree that to be successful as a trader, you need to have confidence. You'll never see a half-hearted, not certain trader that's hugely successful, right? Right? The idea of a successful trader is probably utmost confidence. You know, Mike Tyson, he said in an interview that he would look somebody in the eye in the ring, just stare them down, and if they just looked away for a millisecond, he knew he was going to win, and he was going to destroy them, like literally. And he had to be. No, the funny thing is, he actually was horribly not confident. But anyways, the only way you can develop confidence is through control. So you have to go all the way back, right? Because control leads to the consistency. How could you possibly be consistent, but you don't have control over what your behavior is? Sometimes you buy, sometimes you sell, you're long, short, scalp, swing, you're just all over the place. Well, there's no way, because without the control, you won't be consistent. And without consistency, you can't be confident, because you don't have consistent returns, because you don't have consistent behavior. You don't say things like, in situations like this, I have a 78% chance of winning because my trading history shows me that. Double tops at weekly swing highs or lows, right? Or in that case, highs, or double bottoms at weekly swing lows. After trading them 272 times, my results have been 78% winners. If you knew that for a fact, you'd be confident, because you have consistency and you know what those results are, and you're consistent because you have enough control to look for the proper setups and have trade plans and have trade strategies. You're not winging it every day. You do things like, M2s or whatever. You know the results of your swing trading, for example, because you're looking for swing trade setups. You're measuring the results of those setups, And because of that, you're becoming very consistent and you know what the results are, so you're becoming confident, right? And you know, most of the time in a situation like that, you end up making money. That's why your confidence is there, right? So anyways, going full circle here, in a situation like this, I get out at R2. So I did. But you have to do it every time. Cool. Right on, Peter. Okay. So I know nobody listens to me, but it's still my job to give you the advice. I think you should practice very specific types of trading. You don't just go golfing 3 times a week. You should putt for 4 hours a day. And after 2 weeks of putting for 4 hours a day, you'll probably be a much better putter. Then you get back out on the golf course and you'll notice your score improve ever so slightly, because 2 or 3 times, right? 2 or 3 times in a round, the ball drops and you're like, wow. And the guy, your golfing partner says, dude, your putting's improved. You're like, yeah, well, I put 40 or 50 hours of practicing. Like, yeah, well, I noticed it, man. So, right? And then what? You take out a wedge, and for 40 or 50 hours, all you do is little wedge shots from all around the green. Little bump and runs, maybe some flop shots, but just hours and hours, thousands of little wedge shots. Not approaches, just, 30 yards, 20 yards, 10 yards from the green. And you go from, having the ball land somewhere on the green and sometimes not even do that, to actually going for the pin. And guess what? Now you're in a better position to putt, and your putting's improved dramatically. So now you know, hey man, if I just get it anywhere down by the green, I could chip it on and almost hit the pin almost every time. And then from there, you always make that putt. And your confidence starts going up. You see what I mean? That's how you become a better golfer. And then you say, well, what's next? Well, how about the approach shot? Because even if you make a mistake, you're going to be 10 yards from the green. And you know if you're 10 yards from the green, you're going to get it up and down. Chip, putt, walk. But if you can hit the green, it's called inverse or reverse induction or reverse engineering. Right? Start at the green, work your way back to the tee. So what would you do to become a better trader? Sit in front of your charts and trade for years with mediocrity, right? Or start mastering something, right? That's what I want you to do, master something. So anyways, consistency is there. So as far as I'm concerned, I traded this well, long and long, right? Notice this is the projected bottom of the month. How miraculous is that, huh? That's the projected bottom of the month. This is the projected top of the month. Cool. So if I were me, I would say, well, what did I learn from this? April 17th, we hit actually, well, that Friday and Monday. So let's say this Friday that I'm looking at here, we hit the extreme target for the month of April on, looks like about the 15th of April. Hit the extreme target for the entire month of April, the extreme bottom, projected bottom. full on reverse. Look at this one here. Then we hit the conservative bullish target, immediately respected that. Then up into here, the aggressive bullish target, immediately respected that. And now we're just kind of bumbling around the last day of the month. Oh, but if I had only stayed in a little longer. Well, I don't care. I don't think like that anymore. I don't. So that's cool, right? Let's clean some of this up. Unnecessary. Cool. So Pete, you're finding success after the swing trading course, huh? No more scalping. Right on, man. Yeah. Well, see, again, that's just one thing that you're mastering, and as it appears, you're becoming more and more confident with it. Ryan says, Wayne, when you opened your trade and you saw the monthly target had been hit, were you thinking worst case scenario double to worst case scenario double time again? You know, I don't know. The way I manage this trade, I manage this particular trade with you guys in the morning. I think one of the mornings I moved my stop to break even. I think we were up in here. So I moved my stop to break even. And then I think I added a limit to the R2 when we were, again, down here. So weekly R2, right? And I said, so I either lose nothing or I make 222 pips, I think it happened to be. Yeah, so Pete, I guess what you're saying is I should probably do a scalping course sometime. So anyway, so Pete did well swinging and then gave roll back scalping. All right, well that can happen, right? Death by 1,000 lashes. Oh, buying a. Well, let's go back to this. All right, let's hang on, Ryan. Let's get back to what chart did we have open? I guess it's this one. Okay, what did you say? Because we came up the monthly target, came down. That the reason I did not buy it. What? All right, hang on. Let me try to figure out what you're saying. When you opened your trade and you saw the monthly target had been hit. Oh, M4. You know, I didn't even see it. I'm like a drone robot. There was a gap. I bought the gap trade. That's all it was. Okay. So it was just, you know, honestly, I didn't even see it on the chart. I didn't even look at it. You know, I mean, it's Sunday. I'm doing stuff, you know. I'm working on really big ideas. I came up with one the other day, pogo sticks on trampolines. Can you imagine? Yeah. So I'm working on these genius ideas and I'm like, oh, dang it, the market opened. So I run to the charts and sure enough, a huge gap. So I throw down a trade plan and, you know, I didn't even, you know, honestly, I didn't even see it. It just automatically did what I was supposed to do. You know, and the real trade is you're supposed to buy that. All right, so whatever. So I bought a bit early, but you know, I bought I think it was a 50% retracement, psych level, all this kind of stuff. I forget what it was. I bought that 382 psych level pivot point. Yeah, so you know, bought it at a 41 and sold it at 43.22 or something. So beyond that, you know, I don't know. I guess I didn't make it too complicated, right? And so when you trade like that, I know what my trade plan is, right? I'm not sort of mixing strategies, right? If I buy it at the 3A2 and my stop is down here, am I comfortable with the amount of money I'm risking? Well, in this case, the only way for me to be wrong is if the entire market reverses. Yeah, it could happen, right? But it's beast. It's going straight up like a rocket. Nobody wants it to come down. It just gapped up. I mean, I don't know. It seems rare. So I suppose it was something I was willing to risk. It seemed unlikely. So that's that. It's just a trade. I bought in an uptrend with a gap, retracement off psych level. Just I was comfortable with it. I just didn't think it was likely that we would come down and then up. And even then, I would just sell the next lower high. So, you know, it's just that's it. It's just a trade. Right? That's all. Just a trade. I just happen to take 4 or 5 of them. All right. So what are we going to do with this? Let's get rid of Aussie. Is it getting better? Or do you feel the same? Does it make it easy on you now? Got someone to blame, you see. All right. So what do you think? You say, well, no. So that's the first of the month, basically. We'll, we'll say that is okay. So how does it look this month? Oops. You notice anything? Not really playing the weekly, or sorry, the monthly pivots, right? Monthly pivots not really in play. Now you might argue that this is playing off the monthly central, but it seems like it could also be playing off the weekly central. So be careful because you're going to have some confirmation bias. But like, is any of this a weekly pivot or monthly pivot? No. Right? Is any of this a monthly pivot? No. So, okay. Daily 55. Yeah. All right. Well, you also have to realize that the peso trade is it really behaving this way because of all of that? Is that really the daily 55 EMA? You know, like for example, when it comes to daily and weekly charts, if I were to use weekly, um, I don't think I would use a 55 EMA. Do you think the market's using 55 EMAs? What would the market use? Well, be careful, Ryan. Confirmation bias. I mean, yes. I mean, okay, look, I invented the 55 EMA, but you'll never hear professional analysts say, well, if you look at the daily 55 EMA, I've never heard a professional analyst like on television talk about the daily 55 EMA. So what would they use? 50. Okay. Now, see, I originally started with the 60, and then I reverse engineered it to 55 because I was wondering if the reason my 60 EMA works so well was maybe I just had it off a little bit. Maybe it was 55 because of Fibonacci. I thought maybe back then Fibonacci was some sort of magic number. Of course, it's not. But I wondered. I shifted it to 55 and it worked just as well. But maybe I wasn't really close enough. Maybe it, okay. So what a professional analyst would likely use would be a 50 simple moving average, right? Because remember, analysts are stupid. So that's what they would use. Remember, an analyst that wouldn't go below, like, let's say a daily chart is like scalping, right? They would probably use the right? And would they use a 200? They could. Also, a 100 SMA is something that they would probably pay attention to as well. Okay. So things like, you know what this is called? The a 50 crossing over 100? No, not wrong way, Joe. Wrong way. Golden crosses if it crosses up. Death cross. Yeah. So anyways, so that's that. Now I actually like this trade because this giant amount of weakness is market stupidity, right? It's the Trump move, the Trump election. And somehow Mexico being next door to the largest economy in the world, right, was going to be bad for Mexico if that economy was going to be good. So I don't know. And of course, this idea that the US economy is just going to dramatically and instantly improve is also like ridiculous. It's not even laughable. It's stupid. You're like, what were they thinking? Oh, the reflation trade, right? Oh, Trump's going to come in and spend $1 trillion, and the Republicans are going to pass all kinds of things instantly and quickly. And like, really? Is that honestly what you think? I mean, it's ridiculous. It's like talking to a child, right? Except the child is the entire market. Like, wow. And then you find out maybe that they're over overly optimistic, right? So, anyways, so I kind of like the peso honestly because, like I said, it's it's a labor uh, a labor source for the largest economy in the world. How could that possibly be bad if the U.S. economy is going to improve over the next, let's say, 4 years, if you just want to do a Trump thing? Not that Trump is necessarily responsible, but we're already on the glide plane. We've already gone through the recession. We've already done $3 or $4 trillion in quantitative easing. We went from 10% unemployment to full employment. I mean, why wouldn't it? And what happens, by the way, when your economy hits full employment? There's not enough workers. So because of that, you might want to cross the border to Canada or the United States, or Canada to Mexico, whatever, pick a border, cross it, hire some of them. And then what happens, because there's a shortage of labor in the United States? American wages go up. So you're like, dang, even if I could hire an American, they're way too expensive. $20 for flipping hamburgers at McDonald's? What kind of socialist pig dog countries are we becoming, right? $20 for flipping hamburgers? Why the hell did I pay to go to college? I can just work at McDonald's, for crying out loud. There's no reason to even go, right? So, therefore, all of a sudden, Mexicans, in comparison to Americans, are also way more affordable and right priced, if you will. You know what I mean? So all of a sudden, a country like Canada and the United States on the longer run, or Canada or Mexico, Mexico is the one on topic, should have a pretty decent positive outlook. And in particular, they pay high interest rates. Why not hold some peso, you know? So I don't know. I think there's a lot to like, but you still got to be careful about it. So here we are. Now let's talk about this. You know my strategy, okay? And my strategy only has one direction, which is simple enough for me to even follow. Okay? And these little boxes that I'm drawing are areas in which my peso strategy suggests selling this pair. So what? Isn't that great? This is a sell zone. 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 I might have missed one, right? Yeah, I missed one. Hang on. March, April. I guess it's in here. Yeah, oh, that's the first. Yeah, of course. All right. So there's some possibilities, right? And so what I'm bringing up now is, look, dude, we're on the daily 50 SMA. All right, that might be good. Monthly central, fine. Oscillator, great. And of course, what's really important here is none of that. What's important here is it's the end of the month. All right, Canadian GDP, 0. Good job, Canada, for doing nothing. U.S. Unemployment cost gone up. That's interesting. U.S. advanced GDP, 0.7. There's a miss on that. Look, we didn't even break 1%. Now, of course, it's advanced GDP, so it's susceptible to a lot of revision. But not amazing, I wouldn't say. I wouldn't call that amazing. Yens have further weakened, which is really good, actually. I'm very happy with that. So maybe buy a dip. What do you want to look at? Beast, CAD, no, USD yen. Well, let's do USD yen. Let's talk about USD yen, baby. Let's talk about you and me. We'll use this, but I'm running out of time on this sucker. Okay, if you're scalping the news, you do it that way. Okay. Currently, the bottom is a 618 Fibonacci retracement. Let's talk about pips, baby. Let's talk about you and me. Let's talk about all the good trades and the bad trades that may be. Let's talk about pips. Let's talk about pips. Oh, eh. Well, that's the weaker dollar I thought would be the response to a miss on GDP. Oh, I see. Okay, there's another component. Advanced GDP price index was higher than expected. That was really delayed by the service. Core PCE revised from to, don't have that yet. So the advanced price, GDP price index is greater than expected. And of course, we're looking at PCE, but that doesn't look dramatic. So I thought we'd get up there before a collapse. Well, it looks like a Friday. It's going to be one of those Fridays. So let me know. Remind me about the counter trend trade. We should talk about that before it's all over. But anyways, this is a sell because of money flow. That's the only reason it's a sell today. I mean, maybe those other things are important too, but that's not what it would be based on. So it looks like we came through the weekly pivot and look at hit my support and respected the support more than it respected the weekly pivots. Isn't that great? So we're still stuck in here. The question is, what do you want to do with this on Monday? And I probably want to get short again. Okay, but again, this is gold, still coming down, but stable at support. Okay, here's oil still coming down and having a battle at the support. But remember, the next level is $47.18. That's what we discussed a while ago anyways. So it really depends on how the bulls, if the bulls want to end it in control or if this moving average squeezes this down. And, I don't mind lower. I'm not thinking 39, but, 47, why not 45, But all of this needs to be updated. The projected low for the month is down here, right? Now, I was saying 47.18 because look at the high of the month. Monthly R1. So therefore, my projected bottom is monthly S1. And you can see I already have it drawn for you guys. So you already know this. Must be whatever. I can't. There you go. All right. So we've already done this last week or the week before. So that's the projected low based on the current top. This on the daily does say it does want to head up. So you got to use your own alpha. Okay. If you want to be long oil, you are at support and your job is to analyze maybe on smaller time frames if it's worth the risk. Take the shot. So you could say lower low with the failure to make a lower high. At some point, you want to take it, jam your stop, and hope maybe you get a sort of a reverse pivot scenario for next week. But I don't know if you're that aggressive or not. I typically am not, but sometimes a trade is a trade. And then what else do I want to cover before we're over? Maybe that's a change in trend. I drew this yesterday. A different version of the same thing as this. Right? So if you're a burr on this, at what point do you get on a euro dollar short? Okay. When do you start thinking about it? More importantly, when do you start behaving about it, right? And then lastly, just to wrap up, I wanted to go back to a beast trade that I'm thinking about maybe watching or thinking about maybe potentially watching. My swing trading class already knows this one, but I'm going to watch, and I think I did talk about this 2 days ago, 3 days ago when I was still in the trade. I said if we were above the weekly pivots here, one thing that I might consider doing in the last 3 or 4 hours of trading today, let's say around the London close, I may watch for a counter trend trade. And let me just briefly discuss the logic behind it. Okay, because I'm a highly trained strategic assassin, trained by Harvard professors about strategy. Right? I can make plans based on what I think someone else might do and have a contingency for it. That's what a strategy is. Having a rule associated with every single given possibility. A strategy set is what it's called. So let's think about this. It's the last day of the month, last day of the week. And you have to turn in your trading history to your manager so you can get paid. Do you want to hold all your profitable trades going into the end of the month? Or would you like to take profits so you can get paid? You guys understand that logic? Now, Forex traders are mark to market, but other markets can move, and then that correlation will change the currency market. But if you are a futures trader or an equities trader and you're not mark to market, for example, if you bought $25 million in Apple stock and it's gone up 5% this month, you haven't made the 5% yet because you're not mark to market. You don't get paid until you sell it because you bought it low, but you haven't earned any money until you sell it to somebody at a higher price, right? In Forex, you don't have to necessarily sell, but in this case, let's talk about it logically. You want to show the results. You want to show your client, let's say, if you're a money manager, that you made 5% this month. So like this month, I think I actually hit 10% again. I think last month was even higher, right? And once again, I don't like that. It's not my goal. I'm not trying to make that kind of return, but I'm getting it. But nonetheless, I want my trades closed so I can say, well, I have no risk in the market today, right? And the return for the month is 11.2%. And then you get paid some money, right? And so there's a high propensity for money managers of all kinds, whether that's stocks or bonds or futures or physical commodities or currencies, whatever it is, right? there's a high propensity for those that want to get paid to exit their profitable trades so that they can get paid. It's a personal decision, but it's a human decision. Do you want to get paid today? Or do you want to get paid next year? Right? It's like, how about this? What if I offered you $2.5 million to work for me? You choose. I could pay you $25,000 a month. I can pay you $250,000 a year. Or at the end of 10 years, I'll pay you $2.5 million. Which one do you choose? By the way, you can do this to 1,000 people and they'll always make the same decision. I'll pay you $25,000 a month, $250,000 a year, or $2.5 million every 10 years. Which one do you choose? Monthly. Well, why? See, it's a natural human thing because you discount the future. Well, you'll notice, Bill, right? $225,000 a month is $300,000 a year, right? Oh, unless I misspoke, did I say 250,000 per year? I meant to say 300, but anyways, yeah, I guess I screwed up the math. Sorry, $25,000 a month, $300,000 a year, or $3 million a year. $3 million after 10 years. Sorry. Now you'll always take it because there's also risk and there's also investment opportunities that you can do with your money so it can compound greater. And so you value money today versus more than you value money into the future. And there's a discounting mechanism for that. And even in my strategy classes, you have to discount future payoffs so that you might want to look at a higher payoff now, let's say to defect on a deal because you'll get a higher return now, but you won't have that deal in the future. You'll have a lesser deal in the future, but you're okay with it because the payoff's so great now, right? So you have to discount and all this kind of stuff. So what I'm trying to say is if you're a money manager and you're sitting on profitable trades right now, the last day of the month, and if you cash out, and this is the big thing, right? If you cash out, because a lot of investors in their particular asset classes won't get paid unless they cash out. So if you cash out today before the market closes, you'll get paid $1 million bonus. Now, it may or may not be in the best interest of the client. Maybe you're in a position and it'll keep going up and up even further. Well, you can always get back in, right? So therefore, even though you're supposed to do what's in the best interest of your client, you would really like that. You'd really like that Ferrari or that beach house or whatever that you need, right? So you cash out today. So I'm going to look for that today. This has gone up. So what can I assume all the profitable traders are doing right now? I can assume that they've been long like I was, but apparently I'm more risk averse, and I'll admit that. I consider myself a risk averse trader, right? So you can buy at support and get out at resistance. Well, I did that, and we did that together, and I told you I'd do it, and I even moved the stop. I mean, I did what I said I was going to do. Great. And now what I'm thinking is these guys that are still in it, if they're smart, they know they probably should have gotten out. You see what I mean? Like, even though it's gone up even further, they're like, damn, I should have gotten out. This is crazy. I got an extra 50 pips on this or 80 pips. Ooh, what if it comes down? What if it comes down? And the stress level has gone up, honestly. If a professional investor knows what's going on, and I believe they do, right? They needed the money more than I did, I suppose. And they sat on it a little bit longer. Great. But I still think that anybody in this is biting their fingernails right now. I gotta get out. I gotta get out. I gotta get out. I gotta get out. And any sign that this shows weakness, I think the whole market's going to get out. So when is it going to show weakness? Well, how about the London close when some people start taking profit? Then you get a red candle. And then it hits some stops and you get another red candle. And all of a sudden everybody's like, that's it, I got to get out. And boom. And the market collapses in the last 3 or 4 hours of trading. So if that happens, I'm not saying it will. I'm saying it's a strategy profile for one particular variable. The variable is if they cash out or not. Now, I might be wrong. Maybe this goes up for another 3 weeks. Great, great. I'm not talking about that. I'm talking about between noon and 4 New York time. If I see weakness there, I might take advantage of it because what I'm doing is I'm hunting stops. Right? I'm hunting stops. You've probably heard of stop hunting. What I'm doing is I'm assuming those traders are thinking about getting out. They're actually sweating. You've been there before on a trade where you're sweating bullets and you're biting your fingernails and you're pacing back and forth in the office, right? So I'm going to look at that and I'm going to help them make the right decision by trying to create the red candles or at least participate in the red candles, believing that this thing could avalanche at any moment. It's an emotional avalanche. You see what I mean? Plus, it's just awesome to make $1 billion hedge fund manager pee his pants. He's like, oh, damn, look, it's crashing, pound yen. Yeah, yeah, there you go. Just makes my week complete. Ride it all the way up for 2 weeks. Make a boatload of money, and then what? Make a hedge fund manager pee in his khakis. What's not to love about that? I love trading. So with that, hey, peace on earth. May the pips be with you. May your profits be above average. You have a wonderful weekend. You hear? Thank you for being on my team every single day. I appreciate you logging in, and I thank you for your respect and your loyalty. And for those, by the way, for a couple of people a couple of months ago bought me a virtual cigar gift cards. And I've cashed them in, and I got like big, beautiful box of cigars came in yesterday, and a couple of weeks ago I got another box of cigars, fully stacked, and I appreciate that. So if you're one of the one of the 4 people over the last 2 years to buy me cigars, I appreciate that. So I might get back to that. Can you have my phone number? Hell no. No, no, of course not. I had somebody out one day. He's like, "Hey, man, I'm going to be in your part of Georgia. Can I swing by and shake your hand?" I said, "Look, I speak publicly every day. I write books and magazine articles. I go on TV. I go to conferences around the world. I give up my time. I give up my effort. You know, sharing something that I think is dear to me. And I'll give you the shirt off my back if I think it'll help you be a trader. But if you step on my front lawn, I will shoot you dead. And my dogs are going to rip your carcass into pieces." Yeah. But hey, I'll meet you in Vegas. No, but I got to have some privacy, right? Dude, I give you my life every single day. Yeah. Yeah. So you come into my my personal life, you're going to regret it. I got to keep something sacred, right? Right? I got to keep something sacred. So anyways, yeah, call me. No, look, I charge about $1,000 an hour if you want to call me. Yeah. Right, Tyler? Tyler knows. Boy, it's really good to have you back, Tyler. I'm worried about you. You disappear like that. Yeah, good. All right, guys. So you have a great weekend. All that kind of stuff. Um, you know. So thank you very much, and I'll see you guys on Monday. Good luck on Sunday, right? For those weeklies and the monthlies. Fantastic. Yeah, it's gonna be awesome. Take care of yourself. So again, thanks for being a client of Traders Way. If not, open an account today. Huh? Bye bye.